Hello, and welcome to another day of TA the old way. Where, as usual, we're just going to assume that markets, like all things that exist, arrange themselves in a fashion that is decent, orderly, and as such mildly predictable. And with that said, what I want to look at today is wave trend indicators. Now, when it comes to indicators, I don't really use anything else per se. I don't find much value in a lot of these indicators that are offered, as really they're just nothing more than a pretty version of what's on the chart already. Excuse me. But I do use these wave trend oscillators like market Cipher. I don't use market Cipher per se, as it is a paid indicator. But then you have Market Liberator and the Vumanchu for free on TradingView. Market Liberator isn't exactly free, it's donation based, but the Vumanchu is completely free. If you just come up to indicators, Vumanchu, you're looking for the Vumanchu Cipher B, not the strategy, but just the indicator. And as you can see, I mean, these blue waves, because what does this indicator consist of? It consists of these blue waves, the dots it generates, and then the money flow, these red and green waves primarily, and there's a few other things packed in there, but I mean, that's essentially really what they're for. You can see on the Vumanchu, the completely free version, all these blue waves are really essentially the same. I do use Market Liberator just because I like the colors a little bit better. This is donation based, or else you can get the paid version of these wave indicators, which would be Market Cipher, where I'm sure you're getting far more than just the paid indicator. You're probably getting access to the Market Cipher discussion group and whatnot that would come along with it. But what is so useful about these things? I'm going to go ahead and close the Vumanchu. Well, these blue waves can be used pretty much just like a regular standard RSI. So I mean, this is giving you, an idea of how the average price is tracking versus time. So it's giving you the momentum of it. Now, what is the regular RSI used for? Well, it's used to tell when an asset has been overbought, as in above the 70 line on an RSI, or if it's oversold, as in above the 30 line. So that's telling us that, there's been a significant sell-off. And what else is it used for? Well, it's used to spot divergence. What do we have here? We have this high on the blue momentum wave, and then we have a lower high on the blue momentum wave, followed by a massive downtrend. And that's clear divergence. What do we have? Somewhere else here. There's got to be some divergence, I'm sure. Pretty much this whole strip of price action here. What do we have here? We have prices making lower lows. In the oscillator, these are higher lows, so you have clear divergence. And what was that telling us? That that a reversal's coming. We got stuck in the sideways bowl, and then we got pushed to the upside. So that's these blue waves are pretty much used for. Now there is two averages, or two waves here. You got a light wave, like a light blue, and a dark blue wave, and when those two time periods cross is what's generating these green dots. A lot of people might follow these green dots. I don't give a lot of stock to that. And while I do use this for the money flow, we can see the money flow is trending up while price is trending down. You should be expecting a reversal. And you can use these principles on any time frame. And what the purpose of these indicators is to keep track of the momentum in the market, where you're looking for one is, is it overbought or oversold? Is there divergence of some kind? Here's some clear divergence. If we go back to our past high, here's these highs, and then you have a higher high on the price, lower high on the oscillators. So what do we have? I mean, right here, it's just clear divergence. Same thing with the money flow, trending down, money flows trending up. Here we have prices trending up, money flow is trending down. Here we've got clear divergence from here, this high to this high, and from this high to this high, all have clear divergence. Now you couple that with resistance, and that's what gives you these reversals. I mean, there's a change. This is showing you the change in momentum. Overbought, oversold, divergence, but what else is it showing? And this is one thing that may be overlooked on a lot of videos on these indicators, and that is the curvature of the momentum waves. Now we can use this almost as a timing mechanism per se, so you can see how these waves have curvature to it, and it's curving to the upside. And now what can we use this for? It helps give us areas where we should be expecting reversals of some kind, or at least a slowing of momentum in the market. So here it's like a culminated right here, and then we can just follow that same curvature to the upside, and we should have been expecting, momentum came down, momentum came up. We should be expecting a reversal in this area. We got divergence, and then we got this nice double top up here. So we can use this as kind of a timing mechanism, or you can see these momentum waves as they're the ones that are even building on the top side. We can follow the curvature of that. We can say, okay, we should be expecting some kind of a bottom in this area, and we have a bottom. Now we can do the same thing right here. We can follow this curvature, and you have, a bottom. Same thing here. You follow the curvature, you have a top. Same thing over here. We can follow this curvature, and then you have a bottom. So I hope it was a help to you. That's what I use these for. I'm looking to find areas for key reversals in the market. So what can you look for? Well, obviously support and resistance. That's easy enough. You can stick to your higher time frames and look for things like engulfing candles in the other direction. Or just like with a regular RSI, where you're looking for divergence or overbought or oversold. That's the same thing you can do with these wave trend indicators. You got your overbought, you got your oversold area, prices up there. You can see the curvature and just kind of imagine that this is about the top, and you could have assumed that there would be some sideways or some downward action thereafter. And then now as you're putting in lower waves as the price is going up, while you're deviating from the momentum in the market. So eventually that is going to catch up and drag price either sideways or down, because what is this is telling you that there is a decrease in the rate of increase in price. So that should show up on the price action. And what can we use this for? Well, we can use it to give us an idea as to where should we expect a reversal. So on our current price action, where should we expect a reversal? Here they're coming to the downside, and you would expect this to be rolling over in this area. The question is will price be down here and then roll over to the upside, or will it hold from here and roll over to the upside? And as it rolls over to the upside, is it able to push up above our current resistance and then roll over? I mean, those are the unanswerable questions, but as far as tracking the momentum in the market, that is what we use these wave trend oscillators for. So, I mean, I use the Market Liberator, which is donation based, I believe, on their website. You could always get the paid version and support the Crypto Face team, and I'm sure you get access to their Discord and other things. Or you can simply use the free version, which I don't see anything wrong with, the Vumanchu B plus divergences on TradingView. And if we only had that, we would have been able to do all of the exact same things, and the only real difference is there's some extra things turned on. You could always go into the settings and turn some of that stuff off if you didn't want to see some of these other things, but we could draw the same curvature. You can see this is painting in your divergences for you. Here we got this nice curvature breaking to the downside. So yeah, I mean, this is a good tool that can be used for pinpointing areas that I should be expecting a reversal. Where should I expect price to reverse in a strong uptrend? Well, as momentum is rolling over somewhere in this area, I should be expecting a reversal. You know, here it came up somewhere in this area, I should be expecting a reversal, you know, past the apex of the curve. As price comes down, where should I be expecting a reversal? Somewhere in this area, and you know, pretty close. But you can do this on your small time frames, your large time frames. I chose the large time frames just because the waves are so clear. It's far more easy to see the curvature in the market. But if we go down to a much smaller time frame, the exact same thing is very clear here right off the bat, and we can just see without even seeing the price, we can see this curvature. We should be looking for a top right in here, and we should be expecting momentum to be building to the downside and looking for a bottom somewhere right in here, and our next top we should be looking, you know, somewhere right in this area. And then you just watch the price action, and as that momentum cycles through the market, where is the price in relationship to it? So here we've had a nice little break to the downside. Now, how far is it able to drag price down is the magical question, because this momentum is going to be down here eventually, and it's going to be rolling over to the upside. Just like here, you can see the price is coming down, the momentum is coming down, and as this momentum rolled over to the upside, it pushed price to the upside, broke this little trend, and then went back to dumping. So I hope it was a help and a blessing to you, but that's how I use these wave trend oscillators. And until next time, trade well.